Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. Now, I have prattled on endlessly on how great a comfort it had and has been that the market has kept within the breached, but still not yet broken and seemingly still valid, May to October 2020 bullish shift pitchfork. Originally drawn well over a year ago to recap some of the more recent significant actions, late September last year saw a halt to the decline, stopped dead by the lower time, currently at 22.55, this pitchfork. The market then rose up to the upper time, currently at 25.95. In late October, where it was also stopped dead and turned back down. By now, you could be forgiven for thinking that the market seems to be ping-ponging between the upper time and the lower time. And as recently in February this year, in early February, the market once again attacked the lower time, breaking it by getting stopped dead once again at the same levels as back in December last year, thus creating a double bottom. Since early February, we have seen a gradual rise that slowly approached the October 2021 high at 24.52. And then 2 Fridays ago, the market broke up over this high with a combined bullish engulfing pattern and bullish opening white Mariposa. This was the ignition to what subsequently happened, a huge move higher up through the upper time and peaking at 2700, just over the February 2018 high at 2684. However, this huge move up was not all it seemed, as prices dropped heavily from its peak, with what the bulls might call a bullish opening white Mariposa, but what was ultimately a shooting star pattern, type 1 bearish. This move was also back below the upper time. By the next day, we had a similar move lower, this time closing below the middle time, currently 24.25. Indeed, the Tuesday and the Wednesday of last week made a 2-day bearish homing pigeon pattern, with a subsequent follow-on lower, such that by Friday of last week, prices had moved below all of the moving averages, bar the long moving average, currently at 22.89. This was an extraordinary about-face lower, considering where we had started on the previous Monday. It ultimately led last week into being a weekly key reversal down. Then yesterday, prices moved lower again and tested the lower time below, currently at 22.55. Today we have dipped below the lower time, but we have still to close below it. Below the market, we now have the late September 2021 to date new uptrend, currently at 22.21, as well as the 50% Fibonacci line of the June to October 2021 move at 22.21 as well. If we have closes below the lower time and a break of this support currently in this 22.21 level, then there is nothing of note as support until the double bottom lows of December 2021 at 21.82 and February 2022 at 21.83. If those are taken out, then we have a really big picture issue about to happen. You see, that would mean that we may be on for a monthly key reversal, and likely a bearish one as well. That is a huge, huge possibility, but it depends if the February lows are taken out and if prices close then below 22.17. LME 3-month tin. I'm really sorry if you've heard this first bit before, but it is so necessary, I'm afraid. So I've been repeating this bit again and again for a year now. The overall bullish incentive is still, surprisingly, alive. Well, sort of. And perhaps still strong here? This may all sound trite, but it is important to know that the original move up where all of this rise in LME 3-month tin was generated from was back within the January to March 2021 bullish shift pitchfork. That started obviously way back in March last year. What we recently saw was a break up and over the upper time, currently at 44.990, created by yet another fresh attack on the upside with a new, more acute January-based bullish shift pitchfork. This had previously seen good work between the lower time, currently at 45.950, and the middle time, currently at 47.770, as the market was corralled higher. Then, with 2 consecutive bullish closing white Mariposas on Thursday and Friday 2 weeks ago, saw prices pushed on to yet an even higher level, with markets on Tuesday last week breaching the closing over the new upper time, currently at 49,590 for the first time. However, it was also the only time, as last Wednesday saw a huge, immediate countering, bearish engulfing pattern that smashed down through the whole of this new bullish shift pitchfork and all the way down through the original January to March 2021 bullish shift pitchfork, plus all the moving averages, bar the rising long moving average, currently at 37,225. The day ended with prices closing up within the broken yet recovering and seemingly still valid January to March bullish shift pitchfork, just over the lower time, currently at 42.25, and just under the rising medium moving average, currently 42.900. That was violent, but that was not all. You see, since then prices have risen up over the middle time, currently at 42.610, and as high as the upper time, currently at 44.990, but have been capped in not just by the upper time but also by the 50% Fibonacci of the whole move of last week at 45.040, and interestingly by the short moving average, currently 44.945. This week prices have made indecisive but lower moves back down under the middle time and the short medium moving average. That is not all. You see, last week's action was so wild and violent that it became a weekly key reversal down, which, to be honest, we haven't seen any real follow-through lower as yet. However, it also set the conditions with still 2 and a bit weeks to go for March to be a monthly key reversal. So if we close on Thursday, the 31st of March, either over 45,110 or under 42,750, then we'll be on. Anything in between, and we'll have a lesser outside month pattern. Right now, we are looking at a monthly key reversal down, but barely. I just wish to finish on the words that I have echoed for weeks and months even. I am sure you as well believe that no market can head in one direction all of the time, forever. Though this metal has been giving a pretty good impression of such a market. This brings me once again to my final point. The same final point I've repeated now from previous commentaries many times. It is this, and I quote, "It can be hellish to rely on only one pattern because it's going to be hellish when it breaks." End of quote. Well, it has broken and it has been pretty hellish. The question now is, will it continue in this vein? Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.